Okay, good morning and welcome to Discovering Technical Criteria That Matter. So the idea behind this webinar was to do with an observation that I made just this week, and I've updated this as of today, so we're looking at yesterday's data. And as of yesterday, May the 22nd, 2020, the S&P 500 ETF SPY is down 8.2% for the year and 12.6% from the all-time highs. So I thought I would take a look at some relative strength indicators and see if there's anything specific about relative strength or any kinds of relative strength that lead to outperformance or have led to outperformance this year. And bearing in mind, this year we started off pretty well. We went up to all-time highs in SPY. We had quite a steep sell-off, and now we're in this recovery phase. By sorting stocks in order of a stock's relative strength, it is possible to find groups that are outperforming. And one particular grouping that I had mentioned in the email for this webinar is up 42% for the year. Now, it's not my intention to, I will tell you what that grouping is, but it's not my intention to try and say what the best groups are and advise everybody on trading, of course. It's more to teach you how, or show you how you can find these things for yourself and investigate and analyze the markets using some tools we'll talk about. So here's a chart that I've been analyzing and used to find this information. And in the chart, you see that the green line here, this is actually SPY. And we start the index here at the end of December, the end of last year. So that indexes are always started at 100. If the index is above 100 at the end, then it shows a gain. And the way they're calculated, if the index, you can tell by the actual final number of the index. So IX comp, that's my comparison index, which is actually SPY, is at 91.5. So you can see that's down, approximately 8.5%. You can see that this blue line up here is at 142.16, so it's actually up 42%. And the red line down here is, and I'll tell you what these are in a sec, is at 75, so it's down 25%. So that's the way these indexes work when they're calculated. They'll give you a final number to tell you from the date that you start the index to where you currently are, up or down. The interesting part about the blue line here is that even in the sell-off, it actually never went below the zero line for the year, which means if you had rotated into the stocks that had this particular relative strength grouping, you would have actually never gone negative. Well, maybe slightly just in the middle here, but pretty much never whatever the SPY went down to. Was that like 30%, something like that? And actually now this blue line is up to 42%. Anyway, we'll get into that in a sec. First of all, let's talk about what is relative strength. And in its most general form, relative strength is you can just think of it as a value that you assign to a stock based on some criteria. And there are common relative strength calculations that people are very familiar with, as Wilder's RSI, as Connor's RSI. But there's many alternative ways of assigning a relative strength value to a stock. Things such as an alpha 21 type of relative strength, which uses a period of history of a stock and it divides it into various segments and it applies weightings to the different segments to arrive at a final number. There's the IBD way of doing relative strength, which is kind of similar to alpha 21, just with slightly different weightings for the different groups. You can assign a relative strength to a stock based on linear regression line, the slope of a linear regression line. For instance, think about that. If you took, you define a period, say 10 bars, 20 bars, 30 bars, you look at the slope of your linear regression line for every single stock over 30 bars, and the steeper the line, the more relative strength you can say it has, and if it's pointing down, if it's heading down direction, so sloping down, then it has a lower value for the relative strength. It's another way of assigning relative strength, and interesting, we're going to look at that one too. You could also do things like percent distance from a moving average. You could do percent price change over a certain number of bars. You could just simply say price is relative strength. Now, that doesn't make sense, other than you'll see when, in a lot of cases, it doesn't make sense, but it can make sense if you're trying to find out whether high price stocks are outperforming low price stocks. But there's many, many more things that you can do to assign a relative strength value to a stock, and we will talk about how you can do that. There's an unlimited number of ways of doing this, we'll say. So how can you tell if it matters at all? Here's a way of doing that. You can rank all of your stocks in your chosen list of stocks based on your particular relative strength value. You can then take slices of your ranking and create indexes from those slices. You can decide on whether to use static or rotating indexes, meaning that the meaning of this is at the start date when you're starting to create the index, you can say that the components of your index don't change for the duration of your index. Or you can say that on a daily basis, you're going to remix the contents of your indexes based on if a stock now has changed into a different slice that you're looking at. So you can rotate into a daily rotation. You can then choose a time period and then produce a chart of all of your slice indexes and compare the indexes over your chosen time period. So is there an easy way to do this? Well, I'll give you a hint. There is a very easy way to do this. And I think it's about time to take a look at how to do this. Okay, there is a template in EdgeRater. I bet you didn't guess that that's where I was going with this. But there is a template in EdgeRater in the Pro Tools category. Under Pro Tools, there's quite a few templates in here. There's a template in here called Relative Strength Ranking and Indexing. This is a very comprehensive template, does a lot of calculations very, very quickly, and produces the charts that I showed you before. So I'm going to show you just how this works, and I'll show you that time frame that we're looking at too. So it looks like there's a lot to set up on the template, but most of the things you can leave set to their defaults. The most important thing is to choose your relative strength function. So if you look in the settings here, relative strength settings, it's very important then to decide on what relative strength function you're going to use for your ranking. And by default, this is actually just set up as a percent change over 1 day. So if a stock has a high 1 day percent change, it's going to appear high in among the list of stocks. But you can choose any function, press the choose button. And once you've pressed the choose button, you'll get to choose from any of the chart scripts that are in the program. And you can choose from ones that you've created. Whenever you create a chart script, it will appear in your My Scripts area. So I have a My Scripts area up here. These are ones that are not delivered with the system, but the things that you add to the program yourself. And so I added one just to test here, close price. I'll show you how to do this in a sec too. It's very, very simple. It's about the simplest chart script you can create. But if you do a search in here for RS underscore, you'll find some pre-built relative strength functions. But it turns out you can use pretty much any of the system indicators. You'll have to think a little bit about whether it would make a good relative strength, give a good relative strength value, but a lot of these do. And you can just go ahead and select any of these indicators and choose the output from that indicator. But let's first of all just run this template to show you how this works. And I'm going to leave, let me see. Let me go back to the rs underscore list of relative strengths. And I'm going to choose my Connors RSI. So this is a very simple 3 to 100 of the parameters used in here. It's a very simple way of calculating relative strength. I'm not going to get into the details of how it's calculated. You can look that up online. But Connors RSI is actually the indicator that I used for the chart that we looked at earlier. So I set that up in here, Connors RSI. By the way, I'm going to be using only the list of stocks that have weekly options for this test. There's 560 of them, so bear that in mind. But you can run this template on any chosen list that you have, be it the Russell 2000, the list of all securities, S&P 500, whatever you choose. But I like to run it on this list because generally stocks that have weekly options are very actively traded. So I tend to use this as my go-to list. Okay, so I've chosen the Connors RSI. The next important thing in here is to set up the index generation start and stop date. So I'm going from the beginning of the year, 1/1/2020, and then I've chosen the end date to be beyond the current day. It doesn't matter if it's beyond the current day. That just means that it will include the very last day of data that we have. And then choose a comparative index. It's nice to be able to generate your own indexes, but it's also good to have a good comparison so that you know if your particular slices are outperforming a solid comparison. And I'm using SPY for that. I don't worry about any of the other settings in here. I can change these things, and we'll talk about the thresholds. I'll talk a little bit about them now, and we'll see how they work in a minute. But when I said before, what you have to do to find out whether an indicator has value, whether a relative strength function has value over a particular time period, a very simple way of doing it is to rank your stocks in order of that value, and then take various slices of those stocks and generate your index from those. And here's where you can choose what slices of those stocks you're going to be looking at. So by default in here, it's looking at 10% slices going from 10 to 20, 20 to 30, all the way up to 90 to 100%. And then there's a couple of extras thrown in, which is kind of around the middle range, 45 to 55. And then there's a 0 to 100, which actually includes all of the stocks in your list, and therefore will be an average of all of your stocks. And then because there's a lot of slices in here, you don't want to clutter the chart too much. So the only things that are by default charted are the 90 to 100% and the 0 to 10%. And also the comparison index is charted too. But you can choose to chart any of these from the beginning, or you can turn them on after the report is produced. So I'm just going to go ahead and run this template on my list. You'll see how quickly this works. So at the bottom left, you'll see what is going on. It's is doing quite a bit of processing. There's quite a few worksheets within the workbook that are produced, and we'll go through these in order. So just to give you an idea of what the template does, let's first of all just take a look at I would say this is the crux of it all. This is the summary of all of that information. You don't have to look at all of the other worksheets in this workbook. If you want to just get a very quick idea of what's going on, this is the perfect worksheet to come to. It's the index charts, and you'll notice that this is the picture that the chart I had shown before in the PowerPoint slides. So, what is it saying? This is showing that the rotating index of 90 to 100, so it's the IX underscore 90 to 100R for rotating, is up 42% since the beginning of the year, based on Connors RSI ranking. So this actually does mean that if you have taken your list of 500 of those, ordered for the CBOE weeklies list. And every day you took the top 10% of Connors RSI values and you traded a basket of those every day, you would be up 42%. Well, obviously there'd be, you can't say that exactly, but it gives you an idea, obviously because of commissions, it's, just going to be impossible to trade such a thing. But the theoretical value gain of that basket is 42%, and really didn't really experience a negative phase throughout the year. Now that's a very interesting result. You can see the SPY, as I said, is currently sitting at about 8.5% below the start of the year. But the lowest of the relative strengths, the lowest RSI stocks, if you had traded only those, it actually reached to down to approximately a 50% loss on the March the 23rd, which was the base low so far, and has now recovered to be 25% down from the high. So it has been better this year to be in high Connors RSI relative strength stocks. So that's a very interesting picture. This is a very quick way of doing this and evaluating any indicator that you choose to evaluate. So I'm going to show you how this worksheet has been built, because you'll find this very useful as you're doing your own analysis. So the very first thing it does is it produces a worksheet of the actual values of the relative strength function. So this is produced for the whole time frame that you specified when you started the template. We said from the beginning of the year. Okay, we have got data before that because we need a few sort of prior bars in order to get us up and running. But the index is only started to be calculated from 12/31 or 1/1/2020, which is around about here. But anyway, this is populated with all of the values of Connors RSI, essentially for every stock in your list, for every day in your time period that you're looking at. So that's the very first thing that the template does. The second thing is it puts in the close price every day on another worksheet. You see I'm just clicking on the various worksheets at the bottom here, and it's putting in the close price of every stock for every day. The third thing is it's giving you a percent change. This is a daily percent change, 1 day percent change of the close price. Again, for every day and for every stock. Then it will take the percent rank. So we're looking at the rank values here. And the way that percent rank works is, if you imagine, what I'll actually do here is, if I just click on the header, this will actually be sorted 1/24/2020, but let's go to the very last day, which was Friday. And this is the way it should be sorted normally. The very last day is sorted so that the highest relative strength stocks are at the top of the list. And so, but these are actual values in the values worksheet. They're actual values from the output from the relative strength function. But percent rank takes the entire range of your stocks and ranks them from 0 to 100%. So the very highest ranked stock, and don't worry about the ones that have an NA in them. Things like JCPenney, maybe that's not trading anymore. Wouldn't worry about those. But take a look at 100 SPLK, Splunk. That's given the value of 100%. And let's take a look at the lowest ranked stock. We'll go down to the bottom of this list. Okay, bottom of the list. So at the bottom you've got, how do you pronounce that? Weibo? That's given a 0% rank. So, and then it's just ranked in between using some, just giving you representation, so everything is equidistant, equally spaced in terms of their percentages. And that's the way that the indexing is calculated. So when I said you're going to have an index calculated based on 90 to 100s, it's basically taking here the 100 SPL. Let me zoom in a bit here. It's taking the 100, which is SPLUNK, and all the way down to until you get to the 90. So these 60 odd stocks all the way down to YPF, these are going to go into the index for the 90 to 100. So you're going to rotate into those to generate that index for 522. So they'll be held now for this index. But yesterday, that was not the content. They were not the contents. Some of these still existed in the index. But if we sort based on yesterday's relative strength ranking, we have a slightly different composition of this grouping. But you don't really have to worry about this. This is actually something that the template uses in order to generate those graphs. But it is interesting to know how this template is working. You could, if you wanted, go and specify an average for your ranking. This is an extra step that I didn't do. A one-day average is just the actual value itself. But if you wanted to smooth out your relative strength values because they were varying wildly, then you can actually apply an average based on a certain number of days, and you would just specify that before you run the template. There was an option over here to specify a rank average period, and that is by default set to 1. And then if we come to the rank change, that's telling us on a day-to-day basis the difference in rank from one day to the next for every one of those stocks. So if it has a big difference, then it means that yesterday, for instance, PDD had an 86% change. That's a very fast acceleration in rank, or a very fast difference, a very fast move, let's say. So there's a bunch of things in here that actually could be interesting aside from just producing these indexes. It's a very comprehensive template and allows you to do a lot of analysis within the template. Every one of these worksheets in this template is sensitive to the charting application. So if we bring up the charting application, or the charting module, I should say, if we bring up the charting module in here, you can see PDD and how it had an 86% change in its ranking. Well, we can see that on Friday, it was quite a significant move in this stock. The template by default also has a history of the rank values of the stock going back in time as well, which it's reading. The chart is actually reading that from the worksheet itself. Anyway, let's hide the chart for a minute, but I'm just showing you that, so I can click on any of these in here, and the chart is sensitive to what I'm clicking on. Just pretty much like any edge-rated template, or any edge-rated report produced from a template. So that's rank change. The other one is rank acceleration. What's moving the fastest? So now we've got at the top of this list for Friday, you've got Panwa. So in terms of this Connors RSI value, it is moving the fastest. Take 2 is moving, accelerating the fastest. It may not mean that it's at the top of the list. It may have gone from being a rank of 10% to being a rank of 30%, but that's a fast move. That will beat something that has gone from a 90% rank to being a 95% rank. And then we have the actual indexes that are generated in terms of values for the index. If you don't like looking at charts, the index charts themselves are produced from this worksheet here. So if you don't like looking at the charts, you can actually come over to the indexes worksheet and see the actual values. But just to give you an idea of how it's all put together, if you look at the rotating index 90 to 100, the current value is 142.16, or a gain of 42%. If we look at the index chart, the final value there is 142.16. And the line here is essentially the line, this row of data here. So all the values will be listed down here. To show you the very start date, it's just important to get an idea of how these indexes are produced. But the very start, 1, 2 to 20, because January 1st was not a trading day, but 1, 2, the indexes are all started off with a value of 100, and then they're set from there and go forward. So then we have our index charts. The index chart is does have a feature that, remember I said, in order to avoid clutter on the charts, by default it's only showing the 90 to 100, the 0 to 10, and the comparison index. But by just clicking on any of the cells over to the right of the index, those charts will actually then be added onto the chart, onto the main chart. So one thing that is useful to do, these are all, you can sort the values. So if I sort this column by the best performing index, then you'll normally find it's either going to be the 90 to 100s or the 0 to 10s, and either the rotating or static. But sometimes it's not. And if you don't have currently that index in view, then you can just go down through the list and show the ones that you're interested in. But having too many on there is just, it can be confusing. Always good to have the comparison index on there. And actually, if you took a look at the average index, let's take a look at that. That was it should be the 0 to 100. So let's find out what that is. That's here, rotating index 0 to 100. Let's pop that up on there. And it very closely follows the comparison index. Obviously, it's not exact because the comparison index is the S&P 500 SPY ETF. But, and this is an index built from the CBOE weeklies list. Okay, so it gives you an idea of the template. Let me just take a look at some questions. One sec. So Gary, unclear about daily buy and sell, day trade or buy at sell at open or close. Well, yeah, so I'm not really, the way the index calculation is working is that it is trading this basket of stocks every single day. So it looks at the end of the day, the close price at the end of the day, and it finds what the new basket should be for that index for the following day. Okay, so we'll be holding those, and essentially you can think of it like completely trading out at the close price all of its existing holdings every day and buying the new baskets every day. Okay. Abraham, can you select only the top 10 equities in the leading stock instead of the whole top 10% percentile? Because question is because dollar is limited in allocation. Yes. Right. So the thing I mentioned, I didn't get too much into it at the beginning, is that this is the intention here is not to not to give you something to trade. It seems it's unfeasible to be trading so many, unless you're a fund manager and you have millions and millions of dollars and you're trading this whole basket. It's not practical to do that. But to give you an idea of whether what is working over a period of time. Is it good to be in high relative strength stocks or not? Is it good to be in high price stocks or low price stocks? Yeah, it's a very quick way to find the answer to those questions. But if you so if you ran this and you've got these 10% slices, which have a fair number of stocks in them, obviously, because there's 564 stocks in my list that I'm looking at here, and you could be running this on 8,000 securities. And so a 10% bracket would, in that case, would be 800. In my case here, it's going to be 56. I can actually change my ranking thresholds. So maybe instead of the 80 to 90, I just wanted to look at the 99s to 100s. And I'll say, yes, I'll produce a chart of that. And then all I do, so once I've changed that, I just run this again. And now it's going to take that slice that I've just defined in there in the template, and it's going to use that as a slicing for producing my index. And so here's the answer to that question. Let's look at the chart. And the 99 to 100 is now this red line. And the red line was outperforming for a while. It got up to 72% during the, when SPY was down. It looks like it's maybe 20% down. This taking the top 1% of these relative strength stocks, it was actually up 72%, but it's been very, very wild. Okay, and actually the index came negative for a while at the end of March, but now it is at 25% up from the beginning of the year. But you can choose your own slices of the percent ranking in order to create your own indexes and find the information, find out things like that. Dave, thank you so much, Dave McMullen. I'm glad you see the value in this. Yeah, this is a template that actually took quite a long time to put this together. It has been in the system now for a little while, but it's something that I don't hear a lot of people using. But I find it just a very, very quick way to decide whether or not something's working. I really like this. I think this is one of the premium templates in the program. Okay, Thomas, still trying to wrap my head around this. Are we saying that stocks with high Connors RSI values are outperforming those with low Connors RSI values since the start of the trading year? That is correct, Thomas. Yes, in this case, and also bear in mind the list that I'm looking at is only the list of CBOE weekly stocks. I'm not looking at the whole universe, but you could have run this on 8,000 securities. It would take longer to run, but it would work. No problem. You could take a look at that. But that is saying that high Connors RSI, if you traded into high Connors RSI every day, you'd have been doing well since the beginning of the year, which is interesting because Connors RSI, when the Connors people talk about Connors RSI, it's really not used like that. It's not used as a high, when you see high Connors RSI stocks that you want to buy them, it's really looking for Connors RSI going down below a certain level, and then you buy. You're looking for kind of reversion to the mean, but this is showing that buying high Connors RSI since the beginning of the year has been the best thing to be doing. Well, the best, let's not say the best thing, but let's say the best thing out of all of the options you have for Connors RSI. Buying the high Connors RSI has been the best thing. Buying low Connors RSI has been the worst thing, absolutely the worst thing. You would have gotten down to a 50% drawdown, and you'd still be down 25% right now. Okay. Okay, let's look at some more questions. Awesome. Can we use this relative strength template for sector ETF trading system? Absolutely. You can absolutely run this on any list of your own choosing, your own making. You can put your own list together. So you could put together a list of sector ETFs anything, just it's open. It's open, and excuse me, you will find different results, obviously, for using different things. You could use the Dow Industrials, 30 stocks, obviously much fewer in there, and you might find slightly different results. So it's always good to, you've got to bear in mind the input that you're dealing with. Okay. So Joel, can this be combined with the cyclic template? Okay, I'm not 100% sure what you mean. I don't know if you could clarify that question, and I'll come back to it. Rough reading from this is that you select the really top equities and rotate according to market rotation. For example, in bearish case with inverse ETFs, that can be very good. Yes, that's the way that you're reading it is correct, I think. Is that these indexes were based on rotating into the top equities based on a particular relative strength. And can you plot the different relative strength formulas against each other? Great question. Thank you. I'll come to that in a sec. Is there some other relative strength comparison you've discovered that would have outperformed, maybe even more consistently, the Connors RSI you just presented? Another great question. So these, I can tell by the amount of questions and the understanding that everyone has that this is actually, it is super, everyone is interested in this. And I think this is something you should definitely investigate. Okay, I try and find interesting little things from it, but I'm not spending all my time analyzing the market. But this is a tool that you can use to go ahead and do your own investigations. I'm really happy to help you with if you run into difficulties or you need some relative strength, something put into a formula language. I'm quite happy to help with that. But I haven't done exhaustive investigation, but I have done some investigation on this just for the purposes of coming to this webinar. And actually, I have found something that has a better performance than the Connors relative strength since the beginning of the year. We'll find that in a second. Okay, Kevin. It shows what happens in the past. How do we interpret it for future action? You're absolutely correct. It is not trying to anticipate what's happening in the future. But yeah, I mean, what can I say about that? Nobody knows what's happening in the future. Markets change all the time. So, but I think there's value in looking at past periods and finding out information that isn't easily accessible to other traders to give yourself, some edge. If you're aware that, for instance, take this example. If you are aware that high Connors RSI values are actually good, maybe you can apply that to your trading as an extra piece of information. Okay, so it's really just trying to help you with things. Don't tend to change drastically day by day or week by week, but over periods of months and years. So these types of trends do tend to continue for a while, but of course you cannot predict what's going to happen in the future. And what I would say with this is we're looking at a very interesting period of the market. This year has been, we've had this very, very sudden, steep sell-off in the market. We've had this incredible recovery, considering all of the economic damage that has been done. But you could put it down to you've got to follow the Fed with your trading. Okay, there's so much money being pumped into the market, so that's created a different environment to past sell-offs potentially. And you can absolutely, and I would highly recommend going back to look at past historical periods of interest to see to see what the different relative strength indicators, what was working. And you might be able to come up with something if you considered that this period in time was similar to another period in time, that could give you a heads up too. Okay, I think I covered a lot of the questions. Thank you. Really good to see the questions. Thank you. Okay. So there was a question there that I said I was going to just sort of talk about in a sec. And that was, what if you want to compare relative strength indicators? All right, so we've looked at Connor's RSI. Let me look at okay, I'm going to take a look at another one here. Relative strength based on the linear regression slope. And we can choose different periods for this. I'm going to choose my linear regression period to be 20 bars. So I'm looking at the slope of a linear, just to be clear, the slope of a linear regression line over 20 bars. And I'm going to be assigning a percent rank to every stock based on its slope. So there we go, 20 bars, going to use the same time period. Everything else is going to be the same. I'm going to put back my threshold down here that I changed before. I'm going to put that back to 80 to 90, and I'm not going to include it in the chart. Okay, so now the only real change is that I've just changed the relative strength function. And let's just run that on the same set of data and the same time period. It takes a little while. It's going through, as you've seen, it's going through quite a lot of data. And I'll just go straight to the chart itself. Okay. So here's an example of what would have happened theoretically if you had traded into stocks based on their slope, their linear regression slope. If you had traded into stocks when the market was crashing that were, let's see, the red one is the 0 to 10 rotating. So always important to know who's got an R or an S beside this index, because R is for rotating. So if you'd have traded into the steepest downsloping linear regression stocks over this period, at one point at the base of the market, you would have been down 60 odd %. And yet, if you'd have been trading into stocks that had an up slope, you currently would be up 14%. Now, the other thing to bear in mind here is that when the market was crashing like this, these indexes were still being produced. So there may not have been stocks that actually had an up sloping linear regression line, but this still will trade into the top 10%, even if they were downsloping. Right? There's not a criteria that the slope has to be a certain level. It's just taking your whole list of stocks, assigning that relative strength value to those stocks, and trading into the top 10%. So it means that the slope was just steeper in the up direction than the ones in the bottom 10%. But they still could have been all downsloping. And I imagine on March 23rd that they probably were pretty much all downsloping relative strengths. In fact, if you ever wanted to you have questions like that, you ever want to go back and find out what the values were, you just hit the rank values sheet. You come back to the day that you're interested in. And of course, it's going to be hard to see with this particular function because the slopes are, the formatting here is not suitable for investigation because we need more decimal places. You could actually go back in and change the decimal places, but I'm not going to bother with that right now for this demo. But you could go back and I think, if you went back to, that would be March. Okay. Going back. I don't know if you can all see this. Is this big enough, by the way, for everyone to see, or are you really having to squint? Is it better if I zoom in here? I guess it depends on what kind of device you're watching this on, right? All right, so March 23rd was around about the bottom. And So if we go and sort this column by best to worst, you do have some that are positive, but it doesn't take long. You get down to like number 30, Clorox, and you're already at the 0 slope. Okay, so there's only 30 stocks that are positive slope at that point in time. And what were they? VIX, ultra short VIX futures. Okay. Bear ETFs. Yeah, a lot of bearish ETFs and ultras. And you can always double click, as I said before, double click and actually look at a chart on these things. And this is very sensitive. It is sensitive to what you're clicking on. So it knows that I clicked on March 23rd and it's showing me that on the chart here. Okay. So, but apparently a 20-day linear regression line at this point in time was actually positive, because you're looking at 20 bars. So you've been going back over here somewhere. So your linear regression line would be positive over here. Anyway, that's how you can see. The whole point of that was, I'm just trying to say, it doesn't have to be a positive line, a positive sloping line. It could be negative, but still make it into the top 10%. Okay. All right. Now, okay, so that's one. Now, how do you compare the two? The way that when you run a report, or when you run a template in EdgeRacer to produce a report, the reports appear in your report viewer tab. So if you look at the bottom of the screen, I've got a templates tab where I run my template. I've got a reports viewer tab. Every time I run a template, it produces a report. It becomes a new report up here. So I can just see the old report by looking or changing the tabs over here. How do I know what I'm looking at is a good question. And that is, the report actually has listed in here the function that has been used to produce this report. So in this case, the Connors RSI number. Okay, and let's get rid of this one, because that's got the extra 99 to 100 that I did as an example. But now we'll look at this one over here. And let's zoom in a little bit here. So they're the same. And that's how you would do a comparison. You don't plot the comparisons all on the same chart, but you have two separate reports, and you can just switch between them to take a look at those two. If you want the actual numbers that go into the charts, so remember that they all appear in your indexes worksheet for the chart. So feel free to take these, copy that information into Excel from both reports if you want to actually plot them yourself on a chart together, and do your own chart in Excel. But the way that I do comparisons is just by having the reports open here and switching between the reports like this. So let's have a look. Another one that I'm interested in showing is, as I said before, it doesn't make a lot of sense to say that price is actually can give a relative strength value. But if you think about price, it has a value. And what you would then be inferring from that value is the top 10% of the highest price stocks and the bottom 10% of the lowest price stocks. So, all right, so here's something that beats Connors RSI. And this is the 0 to 10. So since March 23rd, the base low price stocks, the 0 to 10% of stocks price-wise have outperformed anything else. And they're currently up 50% since the beginning of the year. But they did actually fall to a lower level than the higher price stocks. But so since in the recovery, they have been on fire, very low price stocks. But then you would ask, I would ask, and you would want to know probably, what those stocks are and what the prices are. So I would go to the close price. Well, first of all, I would go to percent rank. Okay, percent rank, and I'd come down to the bottom of the list. And this will be a bit faster on your machine. It's just I'm broadcasting this, so it's taking a little bit longer to scroll. And then I can see that the bottom 10% is actually from row 573 up to row 518. Okay, so 573 to 518. So then I go over to my close price list and look at the bottom 10%, 573 to 518. And you can see the sorts of prices we're dealing with. Now, obviously, stocks that have a price of 0.17, they don't have to change a lot in order for that to be a big percentage change. But it is an index made up of quite a few stocks, and all of them are below, roughly below. I forget actually the number we went, the way we went to there. But anyway, they range from 0.17 cents, which actually is the lowest, then to approximately $1, and then all the way up to about approximately $10. So that index is produced from, say, $0 to $10 stocks, and been doing pretty well. Dave, yes, thank you, Dave. I don't know if everyone's reading the chat, but Dave's got, that's good. Yeah, as you develop your trading plan, EdgeRater can help to develop parts of your plan to augment your gains. That's exactly a great way of putting it. Thank you. All right, so let's look at some other things in here. So a close price is interesting. Is it good to be trading into stocks that have a 1 day percent change, a very high 1 day percent change? Well, let me just RS underscore. Okay, so we're looking at percent change 1 day. And this will be the same as a linear regression line over 2 days, by the way. If you think about that, a linear regression line over 2 days is just drawn from close to close. If you rank stocks based on that, it's exactly the same as ranking stocks based on their 1 day percent change. And the answer to that question is, again, a surprising result outperforms at the end of the day, but becomes lower. The Connors RSI system, okay, it comes down to the 90 to 100 rotating index. So the top percentage gainers, rotating into the top percentage gainers since the market low has been a good thing to do. I'm just going to take a look at if there was anything else that I had found. Oh yeah, so another thing that I think is interesting, and this is not one of the functions that's named RS, but I was looking through the list of indicators to find something else that might be of interest to look at, that might give a good value. And one of the things is obviously Bollinger Bands. Yeah, and how do you know the indicator that is indicative of where a stock is within its Bollinger Bands is your percent B indicator. So BB percent B. So I can totally use this. The output from this one that I'm interested in is actually called B. You can look at the script to find out that. And I do want to get into just quickly how you can create your own scripts. So sorry if this is going to run 5 minutes over, but let's just look at the percent B. And I'm just going to run percent B over here. All right, so bear in mind, these are now indexes generated by highest or slices of percent B. So the 90 to 100s are stocks that have the highest percent B rating, so they're trading in the upper ends of their Bollinger Bands. Now, I found this a very interesting result because this seems a little bit more consistent. Let's take a look at the old one from the O'Connor's RS function. It's over here. All right, it does end up at 142 or 42% gain. Never came negative, but it came pretty close to coming back to even, or it may have come slightly negative down on the very worst day here. But take a look at this one. Stocks trading into stocks in their upper, or stocks that had a higher, were in the upper parts of their Bollinger Bands, actually never came negative, and has a fairly consistent run higher. And actually during the sell-off down here actually improved a fair amount. This is a very unusual result, because when everything else was selling off down to March 24th, this index was actually improving. Okay, so I find things like this interesting because a lot of times you will read, read about technical analysis and the way that indicators are prescribed to be used. And it has been said in the past that when a stock goes above its Bollinger Band, you should watch out. It's not much further to go, but they can continue going. And this has been a period of time when stocks in the upper parts of their Bollinger Bands have done well. I think it's important to know what kind of environment we're currently in, and that is the environment we're currently in. Stocks in the lower part of the Bollinger Band, so these would be the 0 to 10s, came down to about 50% loss. So imagine if you've been trading in every day looking for reversion to the mean based on stocks being in either below their lower Bollinger Band or in the lower region of their Bollinger Bands. Very, very poor performance down to the base low, and hasn't recovered even as much as the SPY. Right. What I want to then quickly show is if you're looking at a chart, this is how you will enter your own scripts. I know a lot of people do this already, but if you don't, you enter your own scripts by coming over to a chart, choosing the chart scripts, and then you can say enter a new script, or you can look at any of the existing scripts in here, and you can press the edit button to take a look at how they're coded, and you can save it as your own and make some modifications, or you can start completely from scratch. So let's look at the close price. This is the simplest script you could possibly ever write. Okay, here it is. C. It is basically a script which just outputs the close price. All right, there's really nothing more that this is doing. And as I said before, this can be a relative strength function. I think I showed this already, but you can create this under your my scripts. You just put in C : semicolon and press save, and you have a new script called close price. You have to give it a name when you save it. Then when you come over to your template and you do your choose, you then can come up to your my scripts area, and you can choose the indicators that you've created, in this case close price. There it is, and just run the template on that. So if you have an idea for a relative strength function, you're not limited to the indicators that are currently in the system. There are a lot of indicators in the system already, and probably there's something there that's going to fit the bill, but you can totally create your own indicators very simply, and that indicator can become a value for relative strength that you can use with this ranking and indexing function. Anyone who's interested in creating their own indicators, feel free to take a look at the forum, and there's a lot of activity from one of one of Edgerator's pro users who uses the chart scripting ability quite a lot, Henry, and he's posted a lot of great indicators in the Edgerator forum that you can, if you want to put your own program, all you have to do is go in and say new script and copy it from the forum, put it in here and save it, and you'll be that will then work. Okay, let's have a look. Was there anything else that was that stood out? So as I said before, the idea here is not for me to tell about every possible scenario in the market, but more to give you a way to investigate these things yourself. I've shown a few examples that stood out to me when I was doing some research and using these tools, and I would encourage everybody to investigate using your own criteria. And seriously, if you have any scripts that or trouble writing your own scripts and need a little bit of help, I'm quite happy via email to give you some hints and help you out putting some simple indicators together. So, but I think that's one of the big powerful parts of the program, is the ability to customize and do your own things in here. When I first put this template together, and I was really thinking about just the common indicators for relative strength, but the more and more that I use it, the more I've discovered that it is a great tool for showing just what indicators are actually mattering, what indicators matter at this particular point in time, and very quickly too. You know, so if somebody tells me that you should only trade stocks that are above their 50-period moving average or whatever, I'd just put in the I'd put the relative strength function on there, percent above moving average 50, and give me an index of those stocks, and then I could quickly see whether stocks above 50-period moving average are actually outperforming or not. Okay, let's come over here. I think we're just about done. If there are any last questions, please feel free. Oh, wow. Dave McMullen, congratulations. Your grandson, Colton, just arrived. Nice. Congratulations, Dave. Okay. It's an interesting question, Kevin. Are you interested in, as a sentiment indicator, more interested in program or less, more interested or less interest? Yeah, that is an interesting question. I think it's hard to tell with Edgerator, because there's not a lot of, at the moment, it's sort of this hidden gem. You know, there's not a lot of advertising going on. There's a solid group of users who use the program regularly, but there's not a lot of advertising to bring in new people. So it's hard to tell new interest. But I have seen more interest in the ETF Trading Bandit. That's something that, you know, that is much simpler to use and understand. It's just press a button and it will spit out a list of buys and sells. Okay, it won't give you all the great information of Edgerator, but that has become of interest to people. So I'm not quite sure what to make of that. But the point with that is also, I've had some emails from people saying that during the big sell-off, the ETF Trading Bandit did not perform well, and I would expect that to be true as well. Though, and if you think about that in relation to what we've just been talking about, the ETF Trading Bandit is a reversion to the mean. It's using those high probability ETF strategies, which are really based on reversion to the mean. And in the sell-off, we did not have reversion to the mean. We had just continued sell. And so those strategies don't work during that time. But since March 23rd, those strategies have worked great because the market's been giving these little signals that it and people are getting worried. It's giving signals that it's going to sell off, and it's giving great signals to get back in and get in at a certain level when, in those cases, indicators are oversold, and then the market's just been going up from there. So yeah, anyway, so that's what I've been seeing. Just out of interest then from anybody else, is who thinks, and you can give me a yes or a no, who thinks this is something that you will be using going forward? That's good to hear. There's a lot of people are going to use this. I really hope so. Yeah, I think this is great information. Okay, that's good to know. One thing we didn't talk about, but I should just quickly mention it, is this is probably the thing you see first when you run the template, is there's a dashboard produced. And the reason I didn't really talk about this too much is that it doesn't give that much information, but it's just a roll up from some of the other spreadsheets, the other worksheets in this workbook, I should say. It's a roll up of what are the current 10 highest ranked stocks in your list. What are the current 10 bottom 10 ranks? So it's only dealing with 10, and my list has 500 stocks in it. So it's interesting and useful information, but it's pretty obvious what this is showing. So we didn't get into that too much. It is good information. And as you can imagine, the top 10 ranked stocks, when I'm looking at the close price, Amazon is number 1. So Amazon is the highest priced stock in my list of CBOE weeklies, followed by Priceline, Booking, sorry, Alphabet, Google, AutoZone, Chipotle, and so on. So that in itself, there's a lot of information you can draw from just looking at these reports. Okay. Well, that is great. I appreciate everybody being here. Thank you very much. It's good to see such a great turnout. Again, congratulations, Dave. And it's very good to see you on here. And I'm just going to go back and see if there's any questions I missed. I don't think so. Here we go. Kevin, Edge is an amazing program. I'm a big fan of it. Well, yeah, that's a good prediction, Kevin. I like your predictions. How would you set to use not the RS indicator, but RS acceleration? Okay, Thomas, yeah, no, you're welcome. Okay, Abraham, how do you set to use not the RS indicator, but RS acceleration? So I think what you're looking at here is you're seeing acceleration values that have been derived from this spreadsheet. That would be something that you would put into your own script, is to assign, just to create a little script which would be not based on, you would calculate the relative strength for sure within the script, but then you would actually do also an acceleration, relative strength acceleration calculation within the script. And then you could use that totally to drive this as an input relative strength function to give you indexes based on acceleration. Okay, great. Thank you all. Have a great weekend, and I'll catch you all later. Thank you. Thanks a lot. Bye-bye.